Welcome back, guys, to ICT Trading Concept. I'm really grateful to you guys. It's because yesterday I have uploaded a video and so many responses I got from that video. I really appreciate your concern and a request to all of you. Thanks for subscribe and to my channel. And if you are new, please give me a thumbs up. Share my channel to everywhere so that so many people can learn about my channel. And today I'm gonna actually discuss about the liquidity run. If you don't need any bias, if you don't have any bias, or you don't know how to analyze the higher time frame, then how do you take the trade? Yesterday I've already uploaded a video and I was thinking that if I don't do the same thing, then how can I teach you? How can I share my understanding with you guys? So today, to be honest, I didn't go above 5 minute chart. I was in 5 minute chart, and the 1 minute chart is because my monitor is little and I can't see all of the information in 1 minute chart because my monitor is small. That's the thing. So I went to 5 minute chart to see what happened. The price, what did it actually? Today morning session I was busy, so I didn't take any entry, or I wasn't even in front of my laptop. And I came back at like 12:30, sometimes something like that way, that in that time. And I took the PM session entry. You have already seen the screenshot I added at the first of this video. That was my live trade account. So I actually added that screenshot so that you guys can be more confident that you really doesn't need to understand the higher time frame. Sometimes you can actually do the analysis in 1 minute chart, and you can easily take the trade by selecting the buy side and sell side liquidity. And yesterday's video I have already explained everything. If you go and watch that video, you will know what I mean by that. How to actually mark the buy side liquidity, sell side liquidity, and how price actually book it. Yesterday I explained it, and today I have just given you an example that you can use it on your live money. So it's not only working in paper money, it will work as well in the live money. And I will explain the PM session. I took the entry at 1, yeah, something around 1 p.m. New York local time. Also, I have uploaded a video which is actually how to avoid a loss. In that video I told you how to mark the exact swing high or swing low for shifting the market structure. And from that video, some of you guys actually messaged me and also commented to that video that you don't understand how to mark the swing high or swing low. So I will talk about that a little to this video as well. And again, really thank you so much for giving me this much energy to make more and more video. I really appreciate your concern, and thanks for subscribe to my channel. So let's go to the chart. It's already a very big introduction. So today's topic is how to actually you will book the price. How do you know where price will go if you don't have any analysis ability, the high time frame? So here I'm just opened the 5 minute chart, and I saw that it has actually cleared this relative equal highs. You see this high, this high, this high, they are the relative equal highs. Market actually cleared this equal high at midnight and then break lower. It has supported this, the new day opening gap, break lower. All of this, guys, this level I marked it before. If you have already watched my channel for a few days, I marked it before at Saturday actually. So I didn't do it today. It was already on my chart, in my chart, but you don't need this one as well, because if you know where the price is going, you don't need this level as well. So price actually came through this new day opening gap and cleared this sell side liquidity, and when I opened my chart, I saw prices over here. In that moment, when I have seen that market has actually cleared the buy side liquidity, and this is a very big run. It's where is it, the price, where is it, guys? See this high, sorry, this low, they're relatively equal low. That means this low and this low, though this low has taken the sell side from this low, but they are relatively equal. So you have to think it as a zone. You see this low and this low is relatively equal low, so this low doesn't need to be higher than this low. This low doesn't need to be higher than this low. This low can higher than that low. That means you see it has already traded this low, but this is relatively equal low, and this is the lowest low. I marked it as a sell side as well. So I marked this one as a sell side liquidity, and if I go to the 1 minute chart, you will see this is the very clean lows. So I marked it as a sell side liquidity. So when you have opened your chart and you are seeing that market has actually traded from this big run, you see from all over there to this low, and all of this is not, the equal highs. They are not equal high, you see, they are not equal high. What you have now, you have this equal low and this equal highs, you see, the all of these equal highs, they are relatively equal high. And this sell side liquidity, also the sell side liquidity here, and the last one is here. And guys, I'm using the replay mode so that I can share actually what I was thinking at that specific moment when price was acting over there. I think one of my brother, he's I do not want to actually pronounce his name. It's because my pronunciation is very bad. So if I mispronounced his name, it will be maybe very bad for me and for him as well. So but he told me that when I actually yesterday I uploaded a video by using the replay mode, he told me that it's helpful for understanding. So I'm using the replay mode today as well. So actually at from 12:40 I'm just using the replay mode. So in that moment I have seen that market actually cleared all of this buy side liquidity, and if it want to go higher then it should clear the sell side liquidity first. Then yeah, I can expect that it should be a higher run. And near here there is no, relative equal high. I didn't see any relative equal high. Market was actually trading this fair value gap, you see the blue line. This, let me actually delete this one. Okay, so market was trading this blue line, this fair value gap, the consequent encroachment. As in that moment I was expecting a market structure shift. I really love 1250 to 110 macro, the launch macro, you can say the not launch macro, it's at the end of the launch and the starting of the New York PM session. So I love that macro actually. So I was waiting for a very clean market structure shift, and I marked this high as well. That means the uh, imbalance. Price always move for two things: either it will go for the liquidity, or it will go to balance the imbalance. So you see this is imbalance, it has traded this imbalance, the consequent encroachment, that is a very powerful place for reversing. So and it has already cleared all of this buy side liquidity. Let's see what happened. So market went higher, and okay, in that case I would like to talk about the swing low and swing high. For counting a candle as for counting the swing low, I will talk about the swing low, you guys just think about the swing high, it's vice versa. So for making a swing low, I need a candle which has a lower high to the left of left of its side, left side and the right side. And the next candle, it should have to closed above the high which candle has made the swing low. Is it clear, guys? You see the 12:30 candle, it has made the swing low because it has a candle which has closed higher than this low, and which has a candle which has closed higher than this candle in on its right side. So this is a swing low. I need three candle to make a swing low, but the very next candle, it should have to close above the high, or the above the high which candle actually make the swing low. If it doesn't make close above the swing high, I need a run actually. That means market actually want to go opposite side. If I would really mark this as a swing low, I need a higher run. Yeah, the next candle can't, maybe it won't close above the swing high, but the very next candle, it should have to closed above this high. That means I need some close above this high, then I will count this as a swing low. Okay, so it's vice versa like this. If you see this candle, this is my swing high because it has a swing, it has a candle which has actually closed below this high, and the second candle, it has also closed below this high, and there is a run, you see, opposite run, and the very next candle, it closed below this candle. So this is a valid swing high for me. So that is swing high and swing low. I think, guys, it's clear. If it's not clear, then let me know, I will try to explain it in the on the in other way. Okay, so let's go to the market. So when I have seen that it has actually shifted this market, you see this low has actually traded this fair value gap. So this low is valid market structure shift for me, but there was no, what can I say, the fair value gap. So I was looking for a fair value gap. There's, you see, there is no fair value gap, and market started to go higher. In that moment when it went over there, it's already inside the macro. That means 1250 to 110 macro. I was thinking if market tap up to this gap, I will take my short, but as you have seen that I didn't actually take the shot over there. It's because I was in that moment I was thinking, okay, I will just take a screenshot and I will add that to today's video so that you guys can be confident. And this one actually I don't trade, so I didn't actually took that trade on. I wait for more confirmation. So you see the very next candle, it actually tapped to the lower part of this fair value gap and it started to go lower. Okay, in that specific moment when it has actually came below this low, this gap, fair value gap, let me actually mark this gap. When it came below this uh, fair value gap and closed, the candle closed below this fair value gap, it has made the inversion fair value gap for me. As I know market will come lower and it will clean this sell side liquidity, I was needed a inversion fair value gap, though I didn't have the market structure shift over here. But I was pretty much confident that market will go lower and clean this sell side liquidity, as I don't have any bias, but I know where is the liquidity. Here is the liquidity. You see the clean lows and also this low. So this is the market target. Market has already done its upper job. It has cleaned all of this liquidity from here, traded this fair value gap. Also the lower part, it has just tapped to the the highest fair value gap, then just gave me a inversion fair value gap. In the very next candle when it just tap over there, you see the very next candle, I was in the market. My stop loss was just above to this high. Let's see how it actually market did. Okay, if you are really fond of the what can I say, the market structure shift, then you can say this is your market structure shift, and you have the fair value gap over there. I'll show you why I'm talking about this. 1 2, so you have two market structure shift, two fair value gap, and also this has actually shifted this low as well. It doesn't give you any chance. You see, it didn't give you any chance to take entry over here or in this gap. You didn't get any chance. That's why I took this entry when the liquidity is more obvious and you are inside a macro. There's some macro, I will talk about the macro later. Then you have to take the first chance, though it is very risky, but trading is all about risk. So you have to take this risk. This is the I fair value gap. You doesn't need to wait for shifting the market structure. You just can take entry to the I fair value gap, and that's all. Or if you are not sure that it will go lower or not, you see it came, go over the gap, then come back again. You see the indices candle, that means the indecision candle, it has traded the gap again. You could have taken this entry over there. You can take it. You man, sometimes you have to take risk. You have to you have to take risk, otherwise you will miss a lot. I mean the opportunity you will miss, but though there is a lot of opportunities you can get, it's upon to you. It depends on you. So in that moment I was just waiting to this gap. You see this gap, this is the actually daily I fair value gap consequent encroachment, and this specifically this gap, its alignment with this gap. You see this gap and this gap also alignment over there. So if market came over there, I would take another short over there. That is for me. As you know, this daily I fair value gap consequent encroachment actually gave me this thinking that it can use as a resistance. So if it touched over there, I could have added another one, but it didn't give me any chance. So let's see what it, and it has cleared this sell side liquidity. See, but what I told you yesterday, you see this is a very shallow run. It's not the clear, clean. It didn't clean the liquidity yet. It has to come down, and my target was actually over there, and I brought my stop loss over here to the consequent encroachment, just a little bit above of the consequent encroachment. I brought my stop loss over there, and you see, boom. So market actually cleared all of the sell side liquidity, and I don't want to go more further because it's already 16 minute 15 16 minute. So that's the thinking, and that was the the plan about liquidity taking plan. So why you didn't want to go price will go higher now? If price really want to go higher, then it can go higher now because it has already cleared the sell side liquidity over here, and there is some some highs. There is also some highs. If you see this highs now, if price would like to really want to go higher, it can go higher right now. But before cleared this liquidity, it shouldn't go higher. It's going higher on the last time because it was making a setup to the 1250 to 110 macro. For that macro, it has actually made this setup. It went higher, cleared the liquidity, gave you a chance to take entry over there or somewhere here. If you are turtle soup, you know turtle soup model trader, then you already took entry over there or whatever. Just that was your chance to take the short for the clear and obvious sell side liquidity. So that's all for today. Thank you guys for watching, and if you're really new, then subscribe me. If you really love my videos, give me a thumbs up and share my channel. I want more people to learn this concept, and I will try my level best to share everything I know about this concept. Thank you guys. See you. Bye bye.